Hi traders, and welcome to my video on the MACD crossover strategy. In this video I'm going to teach you how you can capture moves such as this one for over 360 pips and counting. This is a very basic trading strategy suitable for all levels of traders. You can use it on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. I'm using an Australian dollar, US dollar 1 hour chart. And the reason I'm trading the 1 hour chart is because I just find the higher chart time frames, such as the 1 hour, 4 hour, daily, monthly, weekly, have more price action, and therefore the signals tend to be more reliable from my experience. This applies to price action analysis, candlestick patterns, technical indicators, support and resistance, trend lines, so on and so forth. Okay, so for this strategy, we just need the MACD indicator. You can see I have already attached it here to my chart. I'm using the default settings, 12, 26, 9. Okay, so what we're going to do with this MACD crossover strategy is trade in the direction of the trend. We're not looking to trade in ranging markets or consolidated markets. We're going to first identify a trend and then use the MACD crossover signals for entry. So how do we identify the trend? Well, first thing first is we draw our resistance level. Okay, so this is where we would be looking at the chart here. Okay, so our resistance level, let me draw our support level. Okay, the support level I'm drawing like this because we have an upwards trend. This is the trend line here. It's maybe over there slightly. You can see it's tested 1, 2, arguably 3, 4 times here, and then we eventually have the breakout to the downside here. This is a bull trap. Okay, people were trying to buy into this trend. They were too late. Okay, they were buying at the high. Probably traders who were in this move back here were exiting their positions, and stop losses were being taken out. And we can see the market starts to make lower highs and lower lows, and therefore we are turning over to a downtrend. Okay, you could have ended on this breakout here. This is not related to the MACD crossover strategy. I'm just pointing out what I can see on the charts. Additionally, there was a strong support level here. You can see this support level holding up, eventually became resistance here and here. Okay, you do have a triple top formation up here around this resistance level, breakout to the downside, pullback, and a breakout. So there's opportunities to enter there, and perhaps the safest opportunity of all is just to wait for the trend confirmation, okay? Then the pullback. So you have your trend confirmation down here, you have the pullback, and then a breakout below this support level, which actually goes as far back as here. And that support level there then becomes resistance. Okay, so that's identifying the trend. You even trade in, you can take the breakouts there. We don't necessarily need the MACD for that. So really anywhere from here, we're saying the market's trending down, we're going to look to take short trades. Now this is when we can look at the MACD. So basically with the MACD, oops, did not mean to put that there, but let me just remove it. With the MACD, okay, so the signals on the MACD is when it crosses over below the 0 line, is said to be a bearish market. Okay, so a downwards market. When it crosses over above this 0 line here, it's said to be a bullish market. So the market's moving up. Okay. As you will see, it's important to be aware of this signal line as well, this red line, because when there's a crossover above that, it can also mean that the market is gaining some upwards momentum. You don't always have to wait for the crossover of the 0 line. Okay, you can see a crossover of the signal line as an early indication. Again, if it crosses over the signal line upwards, it suggests upwards move, just as if it crosses the MACD histogram crosses the signal line downwards. It suggests a bearish move. Okay. Another thing to look out for with the MACD is divergence. So when the MACD is making lower highs, it suggests that the market is going to fall. Okay, see here, lower highs, market starts to fall. Just as when the MACD makes higher lows, it suggests the market may rise. Okay, higher lows, the market rises. Okay, so they're the key components of the MACD. Got them out of the way. The MACD crossover strategy. So with this crossover strategy, we've established the trend. I'll just zoom out so we can see the bigger picture. We've established a trend here, what we discussed earlier in the video. In fact, there is a crossover here. See the MACD crosses from positive to negative to suggest downwards momentum, and this actually coincided nicely with the breakout of this support level here. So that could have been our initial MACD crossover entry there. Okay, and then once the trend forms, if we look for MACD crossovers, so you want it to cross back up to the upside, this is our pullback, and then it to cross back below the zero line will be our entry. Just zoom out there. Okay, you can see the histogram crosses back up and then back below. This is a possible entry to get in on this trend. Okay, so another one, MACD crosses back above and then back below, another entry here. So the first entry, if we just zoom out, what would we have been looking at on the breakout, confirmed by the MACD crossover, 350 pips. This entry here, 180 odd pips. This one here, 150 plus pips and counting. Okay. What we ideally we'd want to get in the trade as early as possible, so up here somewhere. Okay, and then I'd use a stop loss, which would be the recent high. So on this example, trading this breakout, my stop loss would be up here somewhere. Okay, and then as price is falling, I'd move my stop loss first to break even, and then as price continues to fall, I'll just move my stop loss above the highs like here and here and here. Falling pullback and here, here, here. I would just be keeping the stop loss. I'd trail behind the price just to maximize the move as much as possible. What I wouldn't want to do is exit prematurely, around here, and leave all of this on the table. Granted, you can re-enter, but the more times you're re-entering on the trend, the higher your chances are of getting it wrong. I prefer just to get it right the first time. And I mean, if we're wrong, we can cut our losing trade short. If price didn't drop down here and it's consolidated or continued upwards, we could have just cutted our trade for 20 pips stop loss, let's say. And even if we take a few of those losses before we actually catch a big trend, if we maximize the trends that we do catch, we can make back those pips and a lot more. It also means less time chart watching. Once you're in a big trade, it's a nice feeling just allowing the trend to play out and know that worst case scenario, you bank some pips. You can always close part of the position on the way down as well. And there's, if you do exit early or you're just late to the party, there are other opportunities, as you can see, throughout this trend to enter on the MACD crossover. So going back to the MACD crossover, I personally wouldn't use this for entering myself, simply because I can see entries just based on price action alone, like this level of support, and then you've got this level of resistance to price in this channel. Look at the breakout. Granted, that is an NFP non-farmers payroll Friday candle. However, traders were watching this breakout level, and we could have taken advantage of that NFP momentum and entered on the breakout of the support here to the downside. And if you look at the MACD, it wasn't necessarily suggesting a crossover. That being said, a crossover of the signal line would have been a valid entry there. As I mentioned earlier in the video, it's not just a crossover of the zero line. So if we take a crossover of the signal line on the MACD, that's the red line. You can see here the pullback on the MACD. There's a pullback on the chart as well. And then the MACD crosses below the signal line. So this could be a point of entry. The thing about that is the MACD can, it can show you that that's the point of entry, but you probably wouldn't do that for the fact that, you have 4 bearish candles. You're also close to this support level. So you'd want to wait, or I would want to wait for a breach of the support level. That's why I don't take technical indicator signals at face value. Okay, you can use them for an extra filter if you want, but I'm not going to just trade every crossover blindly. Okay, so yeah, you can trade the like here's another example of why not to do it. Price goes up above, the histogram falls back below the signal line. You don't want to sell there because you're going to be selling at the bottom of this move. You can see price starts to consolidate, and the histogram is quite long to the downside. So we're looking at oversold market conditions. And again, I don't need the MACD indicator to tell me that you know, that's a potential trade opportunity. I can just mark my support and resistance. You can see a nice ascending channel there. You can see consolidation, bearish candlestick patterns. You've got a 3 inside down formation there, which is a bearish signal. Okay. I've got lots of videos on candlestick patterns you might want to check out. They can be good for helping with your entry. And then this level of support actually became resistance, which shows its significance. So we could have traded on the breakout there, even on the pullback. Price rejected there. We've got another 3 inside down candlestick formation. So even arguably there. Okay, that level of, I can get that level of support there, another breakout. So ample opportunities to enter in this trend and without even needing the MACD. I do understand some traders might find it visually appealing, but as you can see, if we just waited for a pullback and then a crossover, you know, we're missing opportunities. That's why I don't rely on technical indicators. It's just, there's good opportunities. If you just sat there saying, okay, I'm going to wait till the MACD goes up and then sell when it goes back down and just watch all this play out, you know, you're just wasting time in my humble opinion. But in saying that, you can use the crossover of the signal line, the red line. Just don't buy or sell blindly. For example, that crossover there, you can see it's at the low of these candles. We have a support level here. Let's wait and see how price plays out. Okay, so that's using the MACD crossover in a downtrend. Let's just have a look for an uptrend. Well, we had the one before, didn't we? So again, we'll do our same principles. We marked our resistance before. We can just mark our support level around here somewhere. Okay, you can see prices consolidating in this channel. Oops. See some price consolidation here. I have like an initial breakout here, pullback, and then a continuation through there. Higher lows, so we're in an uptrend. If you didn't take any of these early breakouts and you wanted to just wait for the trend confirmation up around here, there's going to be ample opportunity on a pullback. Okay, so if we go to the MACD crossover, just zoom out. The MACD crossover, so we had a pullback there and a crossover to the upside. MACD would have got us in here on a crossover, which isn't too bad. Cross to the down and cross back up. So MACD signaling here. It's not a bad entry either. Another one here, good entry. And even as far up as here. So to be fair to the MACD, it did pick off some good opportunities in this move here, based on just a crossing over of the zero line. You do have some signal line crosses, but as I said, sometimes they can get you in buying at the, you know, at too high a price, which is why I like to confirm first by looking at the chart. For example, you had a crossover of the MACD and the signal line there, and you would have been buying at the high on that particular opportunity. So it's good to wait for a pullback and then time your entry. MACD aside, I mean, again, you can just draw resistance, trade a breakout of resistance. There was one. Where else do we have? So this level here. Okay, you can see from that big candle there, there was a breakout there to the upside that actually became support. Okay, and we don't need the MACD for this. Okay, there, you know, that level's tested. You got a W pattern there, breakout to the upside. The resistance becomes support around here. Price continues on upwards trajectory. So ample opportunity to enter into this particular move, whether you're using the MACD or you're just using your support and resistance for entry, timing your entry into the trade. Just make sure you don't buy at the high. And as always, have good money management. As I said, I would put the stop loss initially below the low. Let's just say we took this MACD crossover signal here. Okay, so that'd be around here. I placed my stop loss just below that low there, so around 10 pips. And I mean, that first MACD trade there on this trend could have banked us almost 250 pips in the space of a couple of weeks. which is a fantastic trade. I mean, trying to get 250 pips on the 5-minute chart, stressing yourself out day trading could be a nightmare. Yeah, so I'd much rather just capture big moves like this one. Drawing your trend lines, just supporting your resistance. As I said, higher chart time frames, I find they tend to be more reliable, and it's more obvious of where to draw your lines. And the MACD can be used. You can use it for divergence, as here we've seen it was diverging upwards. So we were expecting this move upwards, just as when it was diverging downwards, we were expecting this move downwards. So you can use it for that. You can use it for time and entry as well. Just sometimes bear in mind, if you do wait for the 0 line cross, you could miss a favorable opportunity. And also, if you take the signal line cross blindly, like this one, MACD crossing the signal line, you can end up buying at the high. So it's good to look at it, make some effort to just look at the charts and see what the chart is telling you. Just draw your lines. Resistance, 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 breakout. There's no coincidence that candle, is a bigger candle there. Traders are looking at this breakout. They don't need the MACD to tell them that. I mean, if it lines up, it could be a coincidence. There is no magic indicator, but I do understand some traders like the visual appeal. I just think that candlestick analysis has been around for forever for a reason. Price action analysis. Don't always rely on trading indicators. Okay, but the MACD crossover, as I said, crossover of the 0 line or crossover of the signal line can be used for helping to time entries and even for exits. I mean, once you see the MACD is, making these really high levels, you might think that, okay, the market's overbought. Up here, I can either close part of my position, close all my position, or just wait to see how the trade plays out. But there's actually a good pullback entry here. You can see the MACD pull has a pullback below and then back up. So you could have entered here at the end of that, even at the end of that trend for over 80 pips. The market was still making higher lows. Although, some may argue this was a bearish breakout to the downside, but it's why sometimes it's important to be patient, see how the trade plays out. And as you can see, there was still some gas left in the tank on this move upwards. It wasn't quite a bull trap here. It was more around this area. Nonetheless, ample opportunities to enter trends. You can see an uptrend followed by a downtrend, hundreds of pips to be made in the course of a month with 1 hour chart currency trading. Okay, hopefully you found something useful in this video. I appreciate you watching. If you could like and subscribe, that would be great. And I hope to catch you on the next one.